Today on Rethink Real Estate, we have the CEO and founder of GoForth Global, Adam Capes, who has done a remarkable job building destination companies and clubs, but also now fractional ownership. Now, you may know companies like Picasso. GoForth Global was actually a referral partner we had on the podcast a little while ago, Third Home. And this really does make sense to me from a personal perspective. In the fractional ownership space. And we go through a bit of a case study of my own in our place that we have in New York, and why this fractional ownership side of it does make a great deal of sense, certainly from a retirement perspective, but also we talk about very clearly how you as agents can monetize this as well. Hopefully this helps. Welcome to Rethink Real Estate. My name is Ben Brady, and this is a real estate podcast aimed to deliver sales strategies, marketing tips, and business insights from industry experts and myself to build a listing-focused business for the future. Let's get into it. Adam, welcome to Rethink Real Estate.
Thanks, Ben. Great to be here.
Absolutely. Well, let's dive straight into it. What is GoForth?
Yeah, at GoForth, we put together groups of up to 4 individuals or families to co-own their dream second home.
Right. And I guess that, how did it all start? Because I'm always, from an entrepreneurial perspective, anybody that starts off a company, I'm always curious around the factor of where did you see the need in order to do this, in order to create the company?
Absolutely. I've been an entrepreneur almost my whole career. I actually started a magazine, newspaper, first a newspaper in college, then a magazine in Atlanta. I live in Atlanta. And I got into the destination club sector, which is really it's one of the second home alternatives, which means it's kind of like a country club of private homes. Some of the destination clubs that people may be familiar with in this country, I would say, would be Inspirato, Exclusive Resorts, Equity Estates, which I co-founded in 2006. So I've been in this industry for about 20 years, and GoForth is really the evolution of what we've seen in terms of the needs within the industry.
I think that it's so, just if I can understand for the audience and myself, the difference between that, what you said you originally started, those companies you named, versus what you're doing. The destination side of it is more so that, is that something where, like, let's say that I have a second home and I can put it into the pool and then have access to other second homes? Is that what that is?
That's actually called home exchange.
Okay.
And we've actually incorporated that within our offering as well, because we're partners with the largest home exchange company on the planet, which is called Third Home.
Oh, we had the founder of Third Home actually on the podcast. Yeah, that's right. We did.
Yeah, they do a phenomenal job. But they have over 17,000 homes around the world that our owners get to enjoy as well. So that's a kind of cool side piece of it. But in terms of the difference between like destination clubs, where I cut my teeth, and now at GoForth, which is really more of a fractional model, in a destination club, we had an equity destination club that I co-founded called Equity Estates. It's still around, doing really well. And Equity Estates, you own a small piece of many homes. So it's kind of like a mutual fund, if you will, of luxury vacation homes.
Okay. All right. Understood.
Whereas in a fractional model like GoForth or Picasso, you own, with us 1/4, with Picasso typically 1/8 of a specific home. Right. And then with GoForth, you have access to all of our homes. So it kind of combines the models.
Yeah. Well, I think that the funny thing about it is it's wonderful to see the difference between people, right? Is that, see, myself, I grew up with a second home. Again, this is going to sound glamorous, but it absolutely isn't. It was in the back country of Australia. It's like basically a concrete shell that was on a lake, and we'd go water skiing. And after we were done with it, you could hose it out. That's how
Right.
how raw it was. The
Right.
place that we grew up as a second home, and I love that. I love going back to the same place. I love having that known commodity. But
Sure.
Callista, who is my better half, she would prefer the variety of going somewhere different. And
Right.
whereas to me, I'm like, man, that doesn't really appeal to me. I know where I'm going. I know what the travel looks like. I know all of those different things. So it's interesting to see the nature of who those people really are. What is there any different characteristics that you see? Because I think there's one part of this that I'd love you to compare to. And again, I'm not saying that you guys are this whatsoever, so forgive the analogy. And you might say, Ben, you're so out of line, it's not funny. But I just got off the phone with somebody before, and they mentioned timeshare. And we
Right.
don't have that in Australia where I grew up or whatever it may be. But
Right.
for lack of better terminology, that turned out for most people as like a bit of a shit show, right?
Absolutely. I think that's initially what comes to mind
Mm.
because it's been around the longest. That was the first kind of second home alternative, if you will. It actually started in Europe in the 60s, and then I think came to the US in like the 70s and kind of got big in the 80s. And since then, so the evolution of this is that in the 90s, you had destination clubs.
Mm.
And I'm old enough that I actually was one of the early first 50 members of, I think it was technically the second destination club, maybe the third. At one point in the early 2000s, there was like 9 or 10 of them.
Right.
And then when 2008 came and a lot of companies, there was a lot of either companies that had mismanagement and went out of business or mergers and acquisitions. And it kind of, there weren't many destination clubs. And today, there's a handful. So yeah, it's people think about timeshares, but the difference is in a timeshare, timeshares are typically resort developers.
Yep.
And they build, you think of places like Las Vegas, Park City, Myrtle Beach, these kind of places where they build a big resort and they're like, wait a minute, we could either, if we're not going to make this a hotel, we could sell this residence for, let's say, $1 million, or we could chop it up into weeks and sell each of those weeks for the equivalent of $2 million.
Right.
And it's like, yeah, but you got to make 52 sales or 50 sales or however many. And so, okay, what do we have to do from a sales and marketing standpoint? And then it's all what I would call manipulations, right? You got to give someone a free night or a massage or an activity or whatever to get them to sit and listen to the pitch. And then they figure out how to, get you excited while you're there. We couldn't be further from that.
Yep.
I would say that it's kind of like maybe if you're looking for a vehicle, you could buy a Yugo or you could buy a Rolls Royce. Now, they're both cars. They both get you from point A to point B, but that's about where the similarities end. So with timeshare, you're sharing time, but that's really where the similarities end. So with us, we're buying multi-million-dollar homes. It's not a resort with 1 million units and chopped up. Typically, these homes are $1 to $10 million in value, and you own a quarter of it. So you really can go. It's not trading weeks and all of the timeshare things, and certainly I think a lot of people don't like timeshare because of the high pressure sales presentations that it's kind of I think
it's gimmicky. It's gimmicky. It feels very anyway. Yeah, you're 100%. It's definitely not what you guys are doing.
And that you don't own anything at the end of the day. And so a lot of people are spending money every year. And if they can't really get the use, they're like, I just want to walk away and get out of it. There's a whole industry that helps you get out of the timeshare thing. This is really more, what we do is really more like, Ben, if you and your better half have 3 other couples that you're friends with, and you guys were like, it might make sense. Like, I don't want to buy a whole second home somewhere in Southern California or Cabo or wherever you might like to vacation. but because I'm not going to use it enough, and it doesn't, and it's too much money, and it doesn't make sense. But if the four of us all went in, yeah, that may make more sense. But what we found is that that's one of the fastest ways to end friendships,
Oh yeah.
because then someone has to manage the calendars. You got to, argue over the color of the sofa, and there's all these things that nobody wants to do, and we take care of that. But obviously, we're not just looking for groups where everyone knows each other. It's generally, we actually haven't even had it where anyone's come to us with a group. We put together groups that don't know each other,
Yeah.
and they may get to know each other and be friends. They may not want to. Either way, we don't mind. But it's a very easy way to own a quarter of a home and get the time that you want and have great availability and access to lots of other homes.
I think that the thing that I really want to vouch for here is just because we'll get to the other portion of it here shortly of how do realtors make some money out of this, because I think there's a pretty unique way of actually making sure that where is the value add here for our realtors that are listening with their clients. But Kalista and I own a place in New York City,
Yeah,
and primarily based because we do quite a bit of business over there from our real estate portion arm. But the reality is we bought a property there based on the fact that it made a lot of sense when we were first going there. And don't get me wrong, I think that where people really people might be listening going, no, I don't want fractional, I want to own it and blah 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 blah. I
right,
need to tell people is that yes, when it's the beginning novelty in the first 12 months, you probably will use it, no doubt about it. But
right.
then after we've owned it now for 5 years,
Yeah,
I physically can't remember the last time I was there. The and it sits vacant because it is in a co-op. There's a very different element to that. We can't rent it out and different things along those lines. But
right.
but to have that in a fractional ownership perspective where we could have had access to it or do have access to it when we go there to do business would be really important to us. And the management side of it. So we own a property management company, right? And we've done that both in Australia and here as well in the US. And the management element, as you mentioned, it's not finding the people to do it. It's the person that has to step up and do all of the management of that particular property, make sure everything's paid, make sure the maintenance is done, that then that person ends up building some level of resentment if they're in the ownership to everyone else because they're the ones that do it. And if somebody leaves something that isn't the perfect way that it was before they got it, it just creates this issue. So there's this part of it that makes total sense, not only from a management side of it, but also like the fractional elements of the fractional elements of the stuff that does not build equity, like property taxes, like HOAs or different things along those lines. Having fractional portions of that makes
Right.
total sense.
Yeah, exactly. And we're finding, first of all, I've heard what you said is exactly on point. I've heard a million of these stories. We call them kind of second home horror stories,
Yeah.
right? It's like people buy the home, and you're right. The first year, the first couple years, it's great. The novelty is amazing, and then it's like, oh, every time I go there, I've got to fix stuff.
Yeah,
And
100%.
or even if I have a management company, I got to make sure they're on top of it. And is you're just dealing with all these things. There's bills to pay. There's all the stuff that nobody wants to deal with. And then after a few years, it's like it's not as exciting to go there. And then when you're not there, you're like, oh my God, I feel guilty because I'm not there and it's sitting empty. It's just not efficient. And we live in a world that's getting a lot more efficient, right? It's a sharing economy. You have Uber and you have Airbnb, and it's like, how do we take assets and make sure that they're used appropriately? And I think that second homes are still the biggest wasted assets. I mean, there's so many communities where you walk around and there's these amazing homes that people could totally be enjoying, and they sit vacant 10 months of the year.
Yeah,
And
yeah.
it's like, it just doesn't make any sense. So we think this makes more sense. To kind of match the amount that you're investing with the amount of usage, and also to give people that kind of wanderlust, right? That ability to go to lots of other places if they want to. If they don't, like if your wife may want to go to lots of other places, but you may say, I just want to go back to this place every year for a month or a few weeks or whatever it may be, and you can do that. We really have tried to build flexibility into this so that if you want to do it to make money, you can totally do that. If you want to do it just to use it and to have the best times of year every year, you can do that. If you want to go to lots of places or go to third home and travel the world and go to, any 17,000 homes around the world, you can do that. So we've tried to bring the best parts of all of the models together when we built ours.
No, that's it. Yeah. Again, I think that there's also one other thing that's to be said as well. And Adam, correct me if I'm wrong here, but here's a great example. Calista and I bought the apartment. We had to take it to studs, remodel it so that ultimately then it was to the point that we wanted it. Because buying something that was already completed, certainly in New York City anyway, so this might be different elsewhere, was one, not viable financially, and at the same time we thought that we wanted to put our own touch on it. Horrible idea, awful idea. So buying something from the factor of that is completed and ready to rock and roll is something that I do want people to see the attribute of all of this as well. So I think that you're offering a complete product, correct?
Well, we do both. So we have plenty of properties where someone comes to us and says, I really want to get, we're looking for a second home in Vail or Beaver Creek or Aspen or Hawaii or Florida or wherever it may be. As long as it's a market that we know we've got other people who would be interested in it, we can actually build around that person. They can find the home and come to us and say, hey, I want to buy, this is my dream home, but I don't want to spend $4 million. Yep. Can I buy a quarter of this? And can you guys find the other people? And in most cases, we probably can. So there's existing homes that we have. And we have existing homes right now in Costa Rica, in Scottsdale, in Deer Valley, places in Marbella, Spain, which is one of my favorite destinations that we've been doing a lot of work in recently. Then we've actually gotten into branded residences, which is super interesting. These are pre-construction where we're getting in on the ground floor of a new development.
Right.
And so this could be a St. Regis, a Waldorf Astoria, a Ritz-Carlton, brands like that. And we get in on the ground floor where they've just typically announced it. And so we know they're going to be raising prices as they sell out that property. And after 2 to 3 years, it'll be completed and they're usually sold out by that point. And the price point that then resales start coming up, it's usually 50 to 100% higher than getting in on that ground floor pricing.
Right.
And so we've got lots of amazing opportunities around the world that we're able to offer people for that. And then that's kind of we call it the big three. So the first part of the big three is making memories, right? It's having these experiences that people want to have so that at the end of their life or 10 years from now, they don't have those regrets that, God, we were just so busy. We never got to take those trips we wanted to take. We never went on spring breaks or went anywhere for New Year's week or, took a month in the summer. We didn't do all the things that we wanted to do. Why? Because everyone's busy and it's not easy. There's not companies out there usually that make it super easy to do that. You got to do a lot of research and find where you're going to rent or what you're going to buy or all this stuff. So we try and make it easy. So that's the first part, is the memories and the experiences. The second part, though, is with these branded residences and some of our other homes as well, this opportunity to make short-term appreciation that could be substantial, 50 to 100%. And then the third part is, once the property is completed, it's unbelievable what some of these brands are able to get on a nightly basis from a rental standpoint.
Yeah.
And so the annual returns that, like, we think the kind of nirvana in our industry is if you can take amazing vacations and instead of paying for them, you're getting paid and you're making appreciation, there's nothing better than that.
Yeah, that's interesting, actually. Yeah, that's really interesting. Now, let's segue across to the realtors. How do they make money out of this?
Real simple. They refer someone to us. They don't even have to, we're happy to have them involved to hear about everything and be on calls and so forth. But they could literally just say, hey, I have someone who's interested in your property in Spain. And we have a conversation with that person. And if they end up purchasing, we pay a referral fee to the realtor of 3%.
Wow. So 3%, is that 3% of the purchase price for that portion?
For that share. So if they're spending $1 million on a 1/4 interest in a $3 million home, let's say, then we're sending them $30,000.
Right. Wow. Well, I think that there's a part of this that I think that as far as people within those second home marketplaces, I honestly think that it's almost the duty of care to bring this up to people that aren't aware of it. Like
Absolutely.
I know, like you take into consideration the markets like Palm Springs, Rancho Mirage. You take it like the Arizona marketplace where all the snowbirds have properties. You take into consideration all of these other territories and areas that are those second home marketplaces. So like the ones that you mentioned, the Vales, the Steamboats, the Colorado side of it. Maybe even the Hamptons over in New York. There's the Florida properties as well. Trust me, in Florida at the moment, whilst we're recording this, you would want to have only a quarter of a property at the
Yeah,
moment with
you
the
don't.
market dropping.
It's a mess down there.
That's right. So I think that there's a part of this that is that there's probably a fiduciary obligation to somebody that comes to you and says, "Hey, we're thinking about this as a holiday home. Hey, have you ever considered this?"
Yeah.
So being aware of what ultimately there is available from an inventory perspective for you guys, also reaching out and understanding the inventory, or maybe even providing. So would you see yourself, so let's say that I've got a property at the moment, it might need a little bit of work, it could be a really good destination property. Would that be something that someone could reach out to you guys about acquiring and then fixing up? Or is it primarily just like a property that's already ready to rock and roll pretty much that you might be interested in doing it? Is that how you typically do it? You guys acquire it and then you fractionalize it and then sell the shares?
No, we actually bring the people first. So it starts with the people. So for all of your listeners who are realtors out there, I would say the opportunity really isn't coming to us and saying, "Hey, go forth, come buy this home." We have more inventory than potential homes that we're looking at and
Absolutely.
new developments. A lot of these branded residences that then we it could take us a year or two just to
Got it.
work through all of those. Not that we won't find still some, we'll have someone come and say, "Hey, I want a property in this kind of home in Aspen," and then we
Yeah,
go
you've got to
find.
have the demand in order to have you've got to have the
Right.
supply. Yeah, yeah.
The
Again,
opportunity
yeah.
for the realtors is really to go to any realtor who has relationships with people that they've sold. It could be primary homes, it could be second homes, but they have a relationship with that person. Let's say they just sold them a new house, primary residence, and it's like, okay, you got to wait 7 years until they're going to want to sell that house again and do anything. No, you can go to them and say, "Hey, I know you like to travel, and I know you really like destination, what have you. Um, have you ever thought about owning like a fourth of a home in that destination and having access to all these others too?" Because I'm aware of a company that does that, and I'd love to put you in touch if that makes sense.
Yeah.
And so it's almost more of a fiduciary duty or obligation to, like, if normally if someone was going to go buy a home in another market, the realtor isn't going to make anything. They're not even going to know about it.
100%.
So bringing the value to them and saying, "Listen, instead of you going at some point and buying a second home in one of these places and spending 3 to 4 times as much money, this could be an option for you." Just making them aware of, hey, that may not be something you're interested in, but as a realtor, I always want to have my finger on the pulse of what options are out there. And if you're ever thinking about purchasing a second home or third home, this might be a better way to do it.
Well, I think that there's another part of this that sort of then triggers me is that I've got whether some might call it a delusion of grandeur of what I want my retirement to look like and where I want to be. I'm going to need something in Australia based on my family. I want something in Southern California based on our business, and I want
Yeah,
something in the south of France. Now, to have three different properties in all of those locations,
right.
that's fine. That's okay. It's what I want to grow to, but I also want a boat that are going to be in the south of France. Now, that being said, is that if you times all of that, if you bring all of that up, what is the actual net worth that I'm going to have to make sure that I can either service some type of debt on that, or if I owned it clean and clear, which is hopefully what you would like, what type of net worth are you going to need in order to do so, in order to retire the way that you wanted to? But if I had a quarter over here, a quarter over here, a quarter over here, it becomes far more attainable at that point, and it makes so much more sense.
100%. And we didn't actually expect when we started this that we thought people would buy in one place, in their favorite place, and then they would have access to other homes and travel and use it. And everyone gets 12 weeks, which actually converts into reservation dollars. It's a way to make it fair across the board because some homes are more expensive, some are less. And so this
Yep.
kind of makes it easy when you travel. But it basically ends up being about 12 average weeks throughout the year. And for most people, like, that's way too much. It's funny because people say, oh my God, 12 weeks, I could never go and travel for 12 weeks a year. Yet 99.9% of people are buying the whole house, which is like, if you said to someone 365 days a year, you're going to have access. They're not like, oh, no problem. Like, they are like that. They're saying no problem, but 12 weeks, oh, I could never use 12 weeks. So, we rent out the properties for the most part. In some places like New York City, you can't do that. No. But in most places, we'll rent out the properties when they're not there. And in a lot of these places, we actually think it can really be a great investment. So if you only use 2 weeks or 4 weeks, but what we thought that people would only buy in one place and then use a few weeks in others and then get their rental income. And what we found is that half of our owners have actually bought in multiple locations.
Yep.
So they own interest in more than one home.
I could definitely see that.
And the reason is honestly, it's become because of investment. I mean, the first property we bought in has almost doubled in value in 2 years. And so those owners are like, hey, where else can we do this? And then we found other places, and those have gone up 70% in the last year. And so this, especially the branded residences, but there's some homes that we've been able to find that too. It really is, I think it really is two different markets. There's people who like just want to be in a specific destination. Doesn't mean they won't travel to others, but they really love whatever destination it is. And they want to have a home there. And this is a much more affordable way of doing that. And by the way, this is different than every other model. We know that availability is the hardest thing in this business. In second home alternatives, the ratios are typically 7 or 8 to 1, and people are kind of fighting over those holiday weeks, certainly, but even peak weeks. Because we have a ratio of 4 to 1, and we match owners. So if you came and said, I want to buy a quarter of this house, the first question we have for you is, great, is there a peak date up to a month? Could be a week, could be up to a month that you want to have every year that's protected. Doesn't mean you have to be there, but you can go there, and nobody else can go there during that time unless you decide not to. And so we match owners so that someone has New Year's week, someone has a spring break week, someone has the month of February, or, mid-February to mid-March, whatever it may be. They can have up to a month, and no other model, you're fighting over weeks in other models. You can't have a month in the peak season. So we've seen that post-COVID, people's office, for the most part, is where their laptop is, and they can be anywhere. And so to be able to work, if you live in the northern half of the United States, and in the wintertime, to be able to work at the beach for a month, that's a lot of people have gotten really excited about that.
Well, I think that it's a great product. I really thank you for jumping onto the podcast today, Adam, and giving everybody an understanding. And for the realtors that are listening in, is that, hey, just handing somebody over and being able to benefit on the factor of wherever they are buying in whatever state or whatever country, I think that's a real upside for the realtors that are listening in. But also, I think there's a fiduciary obligation to your client to actually mention this, because if we're dealing with retirees, I know myself in retirement planning, I was often thinking, well, why would I want to own a full asset outright and have all of that capital tied up, when it just becomes, again, everybody has delusions of grandeur, how successful they're going to be. But the reality is you could be that much more successful or be that much closer to maybe a different lifestyle if you don't have to have so much of your capital tied up in a couple of primary assets.
Yeah, 100%.
Awesome.
And if any of your listeners want to reach out to us, our website is GoForthGlobal.com. And they can reach out to us, fill out an assessment form, or email. My email is adam@GoForthGlobal.com. Love to hear from any of your listeners and see if we can help any of their clients or friends or contacts, start being able to live this lifestyle and hopefully be the hero of their family.
That'd be great. Well, we'll make sure all of your information is in the show notes, but thanks again, Adam.
Awesome. Thanks, Ben.
So about 75% of our audience hasn't liked, followed, or subscribed to our podcast. It would mean the world to us, and it would help this podcast more than you know to expand our reach if you were to like, follow, or subscribe on any of the platforms that you're watching or listening on. Thanks again.